We welcome you, Mr. Harshvardhan Roongta, sir, to FinCell Podcast at St. Xavier's College. Your years of experience and your remarkable journey in the world of finance has truly paved the way to who you are today and where you are today. And we're so glad to have you here, share your insights on various topics that surround the finance world. So thank you so much for making it here for our podcast today.
My pleasure, Janika. I think the work that you kids are doing is phenomenal. I'm very happy to be a part of FinCell, at least in this. So thank you for having me.
Thank you so much. So, with that being said, I'm sure most of our audience are pretty familiar with you and your advices with channels like CNBC, NDTV, etc. I'd like to know that how was your journey getting there? Was it planned? Was it unplanned? And how are you liking it? How's it?
So, I graduated from Sydenham College in the year 2000. So, I'm well within this premises of this side of the city in that context. After I graduated, I had that entrepreneurial, instinct in me to say that let's do something on my own. So while I was pursuing the BCom degree, so while I was in the TY BCom, we signed up with IBM for their franchise in Mumbai. So one of the educational centers in Mumbai. So that is why I was in TY BCom. And as I said, I graduated in the year 2000. And then we had the entire 9/11 fiasco that happened. And that was a huge setback for us. Imagine if you're a kid, having high ambition, very aggression, lot of ambition to do what you want to do. And the first project that you undertake, does not do well. It's not really something very motivating. Right?
Absolutely.
Now, from a family standpoint, we've been into stockbroking. So that's been we are the third generation to that business. So we always had something to fall back on. So when this did not go well, I came back to my family business, which was of stockbroking. And at that point in time, frankly, the number of investors putting money into stock market was less than 5%. If you look at the entire ecosystem, financial ecosystem, the money that was coming into the stock market particularly was less than 5%. The number is not very encouraging even now. But at that point in time, we thought to ourselves that, so I have an elder brother, we work together. So we just doing some bit of brainstorming to explore that what is the future of stockbroking particularly. And at that point in time, we believed that if less than 5% of the investing community is putting money into stock market, where is the 95% going? So we had places like real estate, even today, real estate occupies the largest share in individual household savings. Then you have gold, then you have fixed deposits, many other products, insurances, etc. So we said as a business entity, why not we explore, venturing into other areas. So that's when we went beyond stockbroking. And in hindsight, it's a good decision because traditional broking houses are no more, even relevant in today's time with discount broking and the technology and everything going online. It's a good decision I believe we took at that point in time. In the hindsight, what happened for the good. And I believe that is one thing that, if I may take the liberty to say that all of you should think, whatever happens for the good.
Right.
So something that you might be going through right now, like the period that you were going through, our business not doing well with the IBM franchise that we had, it was very dark, right? We feel as if nothing is going to, there's no light at the end of the tunnel.
Absolutely.
But I think in the hindsight, whatever happens for the good.
Well, it's absolutely amazing to hear this from you, and you've also answered my other question that I was about to ask you. With that, I'd also like to know about how was it like, you obviously touched upon your professional journey and what you do and who you are today. I'd also like to learn about how was it for you to make it to these channels like CNBC, NDTV. How did you land up there? What was it like for you to get there?
So it depends on what kind of profession you are. So I can talk about myself. When you're pursuing this financial services business, if I may say so, of course there has to be formal education, right? You can't be talking to people and suggesting to them certain investment plans when you are not qualified enough. Right? So I pursued a degree, a study called the Certified Financial Planner. That's from the FPSB, the Financial Planning Standards Board of India. This is an affiliate to the Financial Planning Standard Board of US. So what happens in the matured markets is that you cannot be an advisor, planner, or per se, in the financial services in that context if you're not qualified enough. So I undertook that education, of course. I got that certification done for myself. Of course, being in the practical field actually teaches you a lot, right? So I guess to answer your question, if you really need to be somewhere, you have to be worthy of it. You can only get lucky once, right? So suppose you're just at the right place at the right time and somebody spots you probably and you land up into that kind of a scenario that you want to be. But if you're not qualified enough, then you won't stay there for long. So specifically answering your query, I mean, it's more about, so if you're talking about channels, which are such reputed channels like the CNBC, Z, NDTV, and all those kinds, very reputed, Bloomberg, etc. They're very particular and very careful about what content goes onto their on their channel. So obviously, to answer that question in one line, if anybody aspires to be there, I mean, that should not be your destination. That should not be your target.
Okay.
You need to qualify, get that qualification for yourself. You need to be worthy of that. And then these things will happen on their own. You don't study to come on the channel, right? You study to pursue your job, to pursue your profession, and these things will automatically come to you. And then after, of course, once you're there, then you have to be good enough to be, being called again or to be present on that panel again. So I think it's continuous education. If there's anything, with one word, if I have to summarize this to say, if you're pursuing any profession, it could be financial services, it could be medical, it could be any architecture, anything for that matter. Invest in yourself. Invest in the knowledge. I mean, I would say, if I'm sitting in St. Xavier's College right now, one of the most reputed colleges in India, students here should feel very fortunate to be a part of this institution. There is a reason such institutions are ranked top among in the country, if not the world. There is a reason for it, right? There is a course curriculum, there is a faculty that is there. So if you can get the most out of them and invest in yourself, get that knowledge at this stage in time, I think this will pay rewards in future. There is no limit to the kind of the benefits that you can get out of this knowledge that you're gaining right now from one of the most premier institutes in India. So invest in yourself, pay some attention to what is being taught in classes. Don't think of it. I tell you, I have a young child myself. Sometimes we have a discussion. So he's of the view that whatever I am studying, I am not too sure what is the applicability of it in real life. So sometimes you kind of lose motivation to say that, what am I studying this for? How is it applicable to me? But everything that you study is not about immediate, implementation. It goes into your subconscious. It goes into, it goes into your personality. Okay? There are cognitive thinking skills that you need to generate. You need to be surviving in an atmosphere which is surprise, right? So I really don't know what's the next question going to be, right? So I need to be ready for that, right? So some of your surprise tests are trying to generate and activate those senses in you. So take everything positively.
Yes.
Again, we should be grateful to the Almighty for being in this institute, and so take the most of it. Knowledge never goes waste. So study as much as you can. Enjoy your college life, of course. I mean, you don't have to be a nerd or a bookworm in that context, but do justice to where you are standing today.
I mean, it's simply fascinating to know that we've just begun with the podcast and you've already, given such insightful ideas and your experience has truly nurtured our presence here. With that being said, alongside, we discussed CNBC and NDTV and all of that. You have also been quoted in top publications like Economic Times, the DNA, and we'd like to know that from your opinion, what do you think is that one personal finance attribute that is seen in the generation today? Like, what is that one personal finance related factor or rather this one topic that can be seen a lot in the generation? For instance, say younger generation coming into the market earlier in terms of investments. So what is that one trend that you see sparking in today's market?
Yeah, I get what you're saying. the one common trait that I see in youngsters today, I mean, I'm talking about people who are in college,
Right.
who are possibly just graduated. I'm talking about that generation. I don't know if you call them what generation, millennials or
Well, it's a mid between
It's-
millennials
no.
and Gen Z.
millennials and Gen Z. Yeah, okay. So, the urge for instant gratification. I mean, everything is so quick today, nobody has patience.
Absolutely.
And in the investment world, in your portfolios, if you're planning to create wealth for yourself, you have to have patience. There is no other way. There is no other way. Let me put this again to you without mincing words. There is no other way.
Okay.
You have to have patience. I mean, we are so hypnotized by with people becoming billionaires with startups and all those things. I mean, we tend to feel that, it's very easy to make money.
Absolutely.
Out of 1,000 startups that are possibly aiming to be unicorns, etc., there's probably only one that lands up. Not, I think 1:1,000 is also not a fair ratio. It could be possibly 10,000 startups and only one lands up becoming a successful story. Forget a unicorn. So I think looking at that one startup to believe that that's what everybody's doing, it's not fair. I think you're being unfair to yourself and putting too much pressure on yourself to only look at successful stories and not learn about what is happening otherwise. I started with the podcast saying that I had an entrepreneur thing myself,
Absolutely.
and that did not do well. And it did not do well in the sense it actually failed. Now, I think failure teaches you a lot what success can never teach. Right? So, one thing that I believe all of you should be open to is embracing failure. Okay? Because failure teaches you far more than what success can teach you. What I learned with that IBM project not doing well for us, I think I wouldn't have learned if that had done well for me. So in the hindsight, I mean, I'm always grateful that that project did not do well for me. Because the learnings that I had at that point in time would not have come to me otherwise. So I think that is one thing that all of you should keep in mind, that it's okay to fail. Okay, or rather, let me put it in other words, it's okay to not succeed. What you've gained is a lot of experience. So never stop trying. Never get demotivated to that extent saying that there's no use. It goes into part of your personality. The other thing that you should be careful about and embracing with a lot of positivity is there is a law of failed efforts, I think something like that. I read it somewhere, beautiful concept. It says that out of so many attempts that you make into doing something, only one you're technically supposed to succeed. So the failed attempts are supposed to be there. So never get dejected or demotivated again when you try doing something it doesn't work out. So that's a law of failed efforts. I mean, let it go waste. It's okay. Not everything is supposed to be successful. So don't give up. Coming back to finance, I know I digressed a little bit there, but being a father to a teenager, or rather to a person who's more than a teenager now, but anyways, we tend to get into that general thought processes. But nevertheless, in terms of investing in finance, I mean, one, be very clear that it is a patience game. You may land up making money quickly, but that is an exception. That is not the norm. In the normal course, it takes time. The second thing is there is nothing too small to start. Like you may think that I am just getting some pocket money. What best can I do with this? I mean, I don't really land up ending the month with my pocket money. I'm struggling with movies and outings, etc. And so where is the question of savings, right? So there is where you could inculcate good money habits. Okay, this is what when I'm talking to students in different colleges as well as universities, the only introduction that you need at this stage is money management. You're not aiming to create wealth at this juncture. You need to understand how to manage your money. That's all. So if you're getting a pocket money, just start managing that pocket money well. So if, I don't know what the pocket money standards these days are, if I take an example of 10,000, is that okay? Is the reason? No, it's way too much.
Depends upon, if you're differentiating it with hostelites and with people who are...
Okay, in general, let's say you're earning a 10,000 as pocket money. In general. Okay. Just for an example's sake, for sampling purposes. If a student is, say, getting 10,000 rupees per month, what is good money habits now? So first thing that you should do is set aside a portion of that. It could be just 1,000 rupees. It could be just 500 rupees. That's okay. Because as I said, your objective is not to make money. The objective is to get into the culture of money management. Right? For that, you could start with even 500 rupees. You could start even with 1,000 rupees. So first, put that money aside. So what you're learning in this process is setting some money aside for future requirements. Now that could be a concert, a Coldplay kind of a thing that you've been all struggling to get tickets for. Or that could be some movie that you're planning to attend or some outing, whatever. So just plan it. If you know something is happening in December, okay, why not just put some money aside from today? Okay, so that would be just one, that 500 or 1,000 rupees that you started putting aside. Then you divide your expenses into 2 or 3 categories. One category is that you have to spend. It's called mandatory expenses. There's nothing you can do about it. I mean, you need to come to college, you need to go back, you need to have some needs in college, etc. Whatever you feel is mandatory. So put that aside. So that would be say about 5,000. If I may just put some numbers, I don't know the exact the breakups, but I'm just giving you an idea. So that would be say 5,000 goes towards mandatory expenses. Nothing you can do about it. Okay. Then there is one category which is discretionary. Right. This is a place where you spend because you want something. We want to go out eating out. You want to go for movies. You want to go for whatever instant gratification. Something that you need to spend for today. And I must say you should do that. Because this time is not going to come back again, right? You're with your friends, you don't go for concerts, you don't go for movie outings and all, it's not going to help. You can't do this after 20 years from now. So allocate certain amount of money for this kind of activity that you want to undertake. Now when you put this money into baskets, okay, so hypothetically you've got the 10,000 rupees right in your hand right now in cash. You make different envelopes. Okay, it's called envelope budgeting. Okay, the first thing that you do is put 1,000 rupees aside. And on the top of the envelope, you write what is that purpose for. Okay, you say that December holiday, the Coldplay concert tickets. It could be anything. So that's for future. And that future should be at least 4 to 5 months away. Then the other one was mandatory expenses. So you said, okay, this is for my, I can't do anything about it, I have to spend this kind of thing. The third is you go to the discretionary side. So the moment you feel that discretionary money is, you're exhausting that for the month, you'll have to stop going out. That brings in that prudence to you to say that, look, now I can't go beyond this. There's then one extension that you could do possibly for students who are in the final year, maybe not the first year. Final year students could do one thing is like, we have something called a white goods fund. You know, it's more like, not white goods typically, but it's like, upgradation of a phone. Like we all want iPhones and we want, and so right now the way of getting it is to go to an ATM which is called parents. Okay, so you go to the ATM and then you try every bit under the sun to get that. So why not become independent, say probably after a year? So you set some money aside to say that, like, I'm eyeing the new iPhone which is going to come next year. So why not I start saving some money for that? It's not that your parents cannot pay for it, etc. It's just that you feel very good when you are provided by your own money. So what are you doing in this entire exercise? You're only inculcating good money habits. Right? You're not going to become a billionaire by putting that 1,000 rupees aside. But this habit will take you to the path of becoming billionaires. Why? Because when you get into serious work and you start getting serious income, right? You will have this habit following you over there. And once you get into the workforce, from your first income that you generate, if you are following this principle, imagine the heads up that you will have in the compounding effects. I'll come to that later in case you wish to talk about this. How money could compound by simply starting early. Okay, so that's when you have that heads up when you get into serious work and you start making serious money. This habit will come with you, and then you'll be good with money management.
That's so well said. As a Gen Z myself, and most of the audience that will be viewing the podcast will be Gen Z. It's going to be amazing once they learn, it's not really about starting off big, but it's about the habits that make you a billionaire. It's amazing, learning about how your professional and your personal life have intertwined so well together that you are who you are today and you are where you are today. With that being said, we'd like to change the gears a bit and look at the current scenarios and your opinions on the same. So starting up, you mentioned about discretionary spending. So major luxury brands, they are experiencing a slow growth due to consumer behavior and economic uncertainty. So do you believe that this shift in discretionary spending by the consumers is a result, or rather is motioning towards a broader economic caution?
No, I wouldn't say so. I'll tell you now, if you're looking at the macroeconomic side, where you say that is consumption slowing down on the discretionary side, yes. Okay. At the same time, there is one class of individuals who are spending on luxury goods without even blinking an eye. Right. So there's a huge demographic divide between the have and the have-nots.
Right.
Okay. One segment of people are struggling to meet their ends, right? In terms of the cost of living is going up. Mumbai is not a cheap city to live in. It's an expensive city to live in. Right? So the cost of living goes up. Right? At the other end, you would find people with excess money, doing whatever they want to. In middle, I think the pain point is where the people who do not have the resources but want to post pictures on Instagram. Okay, that's the segment which is suffering the most. Okay, those who are living to survive, they know what their needs are, and they know how to make them meet in whatever way that they are. The people on the top end of the pyramid who have enough surplus to splurge, it doesn't bother them because beyond the point they have the resources to spend. The problem is with those guys who are just buying things to impress others. So I think this is one thing that if there is a takeaway for people listening to this, would be that stop trying to impress people. I mean, the kind of damage you're causing to yourself and your family is irreparable. I mean, at this juncture, if you're buying a high-end phone only to show off with your friends, it just shows your insecurity, right? It should not bother you at a time. You should possibly develop yourself to a point where which car you drive, what kind of accessories you use, should not be the factor which people know you with. They should know you by your work, right? So it's very popularly said, when your work speaks, do not interrupt, right?
Right.
So if you're doing a good job, that will speak for itself. You don't need external factors or products, or you don't need accessories for people to know you. So I think this is one takeaway which I think, because of this, the surge of social media and the kind of pictures people post about holidays and etc., the happy life that is on social media. I mean, this kind of gives a false impression to others, saying that, oh, I'm missing out, all those kind of things. So if you can just change that bit in your life and get secure to that point that I'm not dressing to impress people, I'm dressing because I feel comfortable, I'm not using an iPhone because of just impressing my friends, but because I believe there are some features that help me for it, whatever. So I think living within your means would be important. Coming back to whether we're looking at economic slowdown, well, economies will have their cycles. So nothing just keeps going up. There's going to be some kind of cycle. When something goes up, it is bound to correct a little bit, etc. Structurally, the Indian economy per se looks very attractive. I mean, if you have looked at the job market overseas, you looked at the economies overseas, you will know that India is the place to be. So I'm also addressing to all the other students who are listening right now. I mean, don't be, fascinated by the dollars that somebody else overseas is earning. Look at something called a purchasing price parity. Okay, so it's purchase price parity that you're talking about. So a person earning $100,000 in the US is equivalent to earning probably 25 lakhs in India. Okay, that might look like a 85 lakh, 90 lakh kind of a package. But the purchasing power parity, if you look at that, is equivalent to earning, say, about 25 lakhs in India. And the job opportunities here will be huge. So do not ignore India. I mean, I think career-wise, you're in a good place to be. Fortunate for you to be born in this era where India is in the growth phase. So I don't think anybody talented, hardworking and dedicated would have a problem building a career in India.
Honestly, that's a wake-up call for many people who do things to show others and not because of, showing who they are. And that is really beautifully said. You should be known by who you are and by the words that you say. With that being said, there's this other question. So, India's fiscal deficit is now to an approximate of 4.7%. Which is lower than the initial estimates. Do you think that this dip in the fiscal deficit will pose challenges to India's borrowing in the global market?
I tell you, let me address it in the context of students listening. Okay. because we may talk about certain jargons which there might be a small disconnect. So let's talk in terms of student language.
Absolutely.
Okay, so what's the job of the government? What is the job of the government? To collect taxes, okay, and to spend that money. As simple as that. Okay, that's the job of the government. So collect money, that's the revenue, and to spend on the development of the nation. Now there is a mismatch. Okay, now there is a mismatch because of taxes not being collected efficiently, or there could be a tax evasion, etc., etc. Is the government not spending? Should the government not spend on development? The development work has to go on. At the one side, I have to increase my taxpayer base. I have to do a lot of that bit. But until that happens, can I stop spending? No, I cannot, right? Because it has to go concurrently. So the government on both the engines are trying to work as efficiently as possible. Okay, so that's the deficit that you're having. You're not collecting enough as much as you need to spend. On the other hand, if I'm not spending, how does money flow into the economy? So government spending is one of the major sources of money flow in the economy. Like government is setting up, they put up the Atal Setu. So there are thousands of crores worth of a project. So who built it? Government built it. Okay, there are tolls, that is a recovery, let's forget it. So when the government gave a contract out for say 10,000 crores, so there is government spent 10,000 crores, gave it to contractors who built it, gave it to the cement companies, gave it to laborers, gave it to for buying iron and steel, etc. So that money, so a cement industry got that money. That generated more employment for the cement industry, that had sales. Those people got money in their hands. They went and bought the goods. They went and bought televisions, mobile phones, cars. They went and bought soap, oils, etc. So this propels the economy. So government spending is a very important factor of money flow in the economy. Right? So that cannot stop. At the same time, the country has to progress. So we see the coastal road, how happy we are with the coastal road now. So there is money that has gone into building that. Right? So government spendings will happen. Collection on the other side has to also happen. Right? Which the government is working very actively towards as well. Right? So this fiscal deficit, to a certain extent, I mean, how do you address it? To say that, okay, I'm not collecting enough, should I stop spending now? No. Right? Spending is one side of the story. Now government is trying to manage that as far as possible in the most efficient manner. So I think certain amount of, so if the numbers have come down from earlier, I think it's a healthy sign. I mean, we're still better, far better than the kind of debt that the US government has on itself. And they've exceeded their limits several times, right? So I think as a student, you should keep your eyes and ears open. The best way to get about it is to say if you want to just catch the one end of the story. So you spoke about consumption slowing down, etc. So if you're inclined towards that, read certain consumption related spends and the story and the articles around that. What is the government spending? Like what is the capex that they are planning to in this budget, which is coming on the 1st of February? I mean, now listen to it from that angle to say how is the government flowing that money into the economy, whichever they're collecting. What are the spends? How much are they planning to spend for the Kisan that they said that will give out money to the farmers? There's a minimum amount, then there is something called Manrega, the Rural Employment Guarantee Scheme. Follow that. Because that money is actually coming into the market. That is going to propel consumption. So one of the demands that we have with the finance ministry now is that reduce taxes. Because you said people are not spending enough, consumption is slowing down. How do you increase consumption? When people have more money in their hand, how will I have more money in my hand? When the government possibly reduces taxes. Right? So one of the demands that is coming up with the finance ministry is because consumption is slowing down. That's a fact. So industry, the CII, all are making those representation to the government saying that reduce the taxes so that your parents pay less of tax. They'll have more money in their hand, which they will then spend. Right? So keep an eye on that number to begin with. And I'll tell you another thing, how do you break down this entire complex world of financial jargons, etc. Take one element of that entire cycle and just study that and then go backwards. So right now, if you're on this topic, consumption, spending, fiscal deficit, etc., just pick the government spending as a topic. Okay, and probably your members could do a small report on that, government spending in the year 24-25. Right? And just say where did government spend? Did they go up or they increase their spending or they reduce their spending? Right? And just try and do that analysis. And then you see the impact of that money flowing into the economy and the consumption being propelled. So I think that will be one small area,
Right.
and it will be practical knowledge for you as well.
And it's again it's enlightening how you have provided a positive perspective, a fresh positive perspective on this topic. And it's great to know about how we can change the way we look at it by actually looking at a few reports, getting to know a little more about the jargons and all of that. Which brings us to our next question. So there has been a surge in exits in regards to the Indian startups through IPOs and acquisitions. So, do you think that these exits are a result of the immaturity of startups in India today? And how do young startups establish themselves so that they aren't quite exiting IPOs and acquisitions?
No, so in fact, exiting during an IPO is actually considered to be a successful exit, quite honestly.
Okay.
So look at it like this. Okay, there is a company which is just starting,
Okay.
and of course there probably could be a seed or an angel level funding, which is like just at a thought and the idea you get funding for that, or you come to Series A, Series B,
Right.
whatever. When you just establish it, you come to certain points.
Absolutely.
Now, as an investor, when somebody invests, okay, they're looking at a startup investor or a private equity investor is only looking for multiplying his money. They're not looking at compounding.
Absolutely.
They're not looking at slow growth of 15% or so. They want to multiply the money. Okay, so, and if the valuations come to that standpoint, okay, which they're looking at, so most of these investors into startups are essentially funds. Okay, so they have a timeline to their fund also. So, okay, let me take it one step behind for you. Let me make it easy for you. Okay, so say hypothetically, I run a fund.
Okay.
Okay, I collect money from investors. Okay, but I say that you invest into this fund, and the objective of this fund would be to invest in a startup. Okay, I will put into 5, 7 companies, whatever, 10, 15, whatever. So I collect, say, 500 crores, and I say I will invest into different companies. So you don't have to go searching for each individual company, right? I will do that work for you, and you put your money into this fund. Now I put some parameters to this, that each company I will not put more than 10% of my fund. So I cannot put 50 crores and above in any one company. So I put my internal controls. I will focus only on industries which are AI oriented, or who are engineering side, or they're into pharma, or they're into whatever. So I have my own set of expertise. So each fund will have identified the sectors that they want to invest in. It could be education, it could be pharma, it could be whatever. So I have a fund. Now I invest into 10 companies. Because I can't go more than 10% in any one company. Okay, so 10 companies, 10 investments done. Now this fund has a lifetime, life stage, right? It says that, okay, this fund is for 7 years, for example. Now when it comes to 7 years, I need to give money back to my investors. So I need to also exit. So until I exit, there is no way I'm going to be able to give money back to my investors. Right? So many times exits happen because the fund reaches its closure. It happens because I've already made my money. So I cannot have everything to myself, right? So I say that if my money becomes 5 times, I'm good to go. So the moment I reach my 5 times valuation, I may exit and look for another idea. So when somebody successfully exits a startup, okay, it's not a bad sign. In fact, when somebody is exiting, there's somebody else buying also. From a startup standpoint, you don't get fresh capital. Because I am selling to another investor, the startup doesn't get anything. Right? But because there's somebody else who found merit in investing into your business. Right? So it actually, when Swiggy went into IPO, Zomato went into IPO, it was looked at very positively, in fact. To say that investors made their money and exited, there is enough demand for fresh investors to come in to buy those shares. Right? Businesses are doing well. So, in fact, IPO would be termed in that context to be a success story. The moment a company goes into for IPO.
Well, again, that's so well said, and I like how you have beautifully, covered upon not only topics pertaining to the current scenarios, but you also touched upon issues as an individual, personally how it feels like for a startup or for individuals and all of that on all of these current scenarios. Up next, we'd like to learn more about your insights on the world of investments. And with that, I'm sure you might be knowing about how investing can be classified into, say, two broad categories, say short-term savings and long-term wealth management. How do you bring about a balance in short-term savings and long-term wealth management as a youth, as a young generation?
So, if you recall, we just started with saying that amount of budgeting, that 10,000 rupees that you're getting.
Right.
What did you do for that? I mean, you started saying that one, that I needed something for today.
Right.
So I had some money available to spend for short-term requirements.
Mm.
I put long-term, it's not 6 months, but I put it for you saying that something is happening in December.
Right.
See, a concert is happening in December.
Yes.
Okay, we're sitting right in January. Right?
Mm-hmm.
So you would start saving for something in December, for an expense in December from today.
Mm.
So that's long-term for you in that context.
Absolutely.
I mean, in this context,
In this
long-term,
context,
yeah, in
right.
investing context, the long-term would be 8 to 10 years minimum.
Yeah. Right.
But in this context, long-term, short-term.
Mm.
So same way, look at a family. Okay. Now all of you can do one thing. Just go back to your parents. They're big enough now, right? You go back to your parents and you say that, look, what are our family's short-term goals
Mm.
and what are medium-term goals and long-term goals?
Mm.
Okay, just sit down with them. Take a piece of paper, sit down with them. Okay, short-term would be anything that you need, say probably in 1 or 2 years.
Okay.
So let's say funding your education, your post-graduation could be short-term goals for them. Right? There's going to be an expense for that, right?
Absolutely.
You may want to upgrade your car.
Right.
You may say that my birthday is coming, I need to buy an iPhone, whatever. That's, that usually is the
Yes.
is the call of the day and the huge expense on parents' mind. Okay, so that would be short term.
Absolutely.
Okay, so how do you intend to fund that? So that would be one part.
Right.
Then would be medium term. Medium term would be like say 2 to 5 years, 7 years, 8 years. It would be like, what are we looking at? So maybe you want to upgrade a house, you want to move. There could be marriage or post graduation. Could be many other expenses that are there. Then you look at long term. Long term would be that after a while, I mean, all of us are not going to be able to work. That is the one sure goal that all of us have. Retirement. So we're not going to be able to work physically. We may want to, intentionally. I mean, we have good intentions to work and we'll be very motivated to work, but maybe we're outdated in terms of our skills.
Right.
We're irrelevant at that point in time, or we would not be physically possible to work.
Absolutely.
Now, how do you take care of your expenses at that point in time? Right? So that will be long-term goals. Now, if you've noted these down, you've articulated them well. Okay, so one is identifying. You identified what, so which is retirement.
Right.
You identified that after 1 year, you need to upgrade to a bigger car. You identified. The next step would be quantifying it. So you want to retire with how much?
Right.
So I want to retire. Everybody's fine. Okay, fine. I have money for retirement, but how much? So identifying a goal is important, and quantifying it is also important. Okay. So once you quantify that, now what do you take into for quantifying that? For example, now so you say that I need something for retirement, for example, or I need to buy something after 7 years from now. You take inflation into consideration. So what is inflation in very simple words? Is the cost that keeps going up, the rise in price of things. So what is available for 100 rupees will not be available for 100 rupees after 1 year. It's going to be more than that. Right? So if you're going to require money after 20 years from now, and if your requirement is 1 lakh rupees today, 20 years later it's not going to be 1 lakh. It's going to be 1 lakh adjusted to inflation. So you do that calculation to say that if I need X amount today, how much will it be worth after 10 years, 20 years from now? Now you've got a figure. So you identified your goal and you quantified your goal. Now you work backwards to say that if I need to achieve, say 1 crore after 20 years, how much do I need to start saving from today? Now you know what's your target. Then you work backwards. Okay, then you take 2-3 scenarios. If I was to put into fixed deposits where I earn 7%, how much do I need to invest today? And if it goes at 7%, simple compound interest calculator. Okay, how much will it become? Or if I invest into another product which has possibility of generating a higher return, which is say equities, mutual funds, etc. And they generate about say 12 to 15% kind of returns, then what I need to invest every month. So that's how you will plan your short-term, medium-term and long-term goals. So the first step is you have to identify them. Second is to quantify them. So undertake this exercise. It's a very interesting exercise. And trust me, if you impress your parents, your pocket money goes up. If you sound responsible to them, I'm saying this as a father.
Okay.
If you sound responsible to your parents, they are more than happy to loosen their purse strings and give you higher pocket money.
But we will definitely give that a try.
So sit down with your parents
Yeah.
as an exercise, a practical experience.
Okay.
I mean, I think you guys are all listening to this are big enough. Where parents would be happy to sit down with you and talk to them about your household expenses.
Absolutely.
So just break them down into 3 parts. Ask them to, what is your goal? What are we trying to achieve as a family in the next 2 years from now?
Right.
I mean, 7 years from now and 20 years from now. And you start putting the numbers down, I'm sure you'll impress your parents to have more of pocket money coming your way.
Well, that sounds a great trick to bond with our parents. But yeah, sure. I mean, it's great how you have amalgamated both financial habits, as you mentioned during the start of the conversation, and also with investment practices that we should be looking at to implement ourselves well in the future in terms of retirement and pursuing long-term goals. And also, I mean, rolling around the current scenarios, I'm sure you might be certain of the fire that broke out in LA recently, the geopolitical tensions around the globe, as well as the inflation that it goes on rising by the day. So, amidst so much economic uncertainty, there's a lot going on. How can young people, or rather the people entering the job market, how can they manage their money effectively in terms of investment to pursue long-term goals? So what is the mantra over there?
So I tell you, I'm so happy that all those listening to this and you people here are so young. You really have no clue what power that you're sitting on. I'll explain to you with numbers. Okay, I mentioned to you that the earlier you start, the better you can, the higher amount of wealth that you can create for yourself.
Right.
I'll use a small example. If you were to save 1,000 rupees right now, every month for 30 years, so 1,000 rupees that you invest every month, you set aside for 30 years. And if that was to grow at about 14%, this is an assumption, it's not a guaranteed kind of a return, it's an assumption. That's what a long-term average equity SIP investment has generated on an average.
Yes.
Maybe it will be plus minus, whatever.
Right.
If it generates about a 14% return, 1,000 rupees is what you set aside every month. So that's 12,000 rupees a year. And you do 30 years. So 3,60,000 is what you invested from your pocket. How much do you think this amount will become after 30 years? A 1,000 rupees set aside, growing at 14%, 3,60,000 is what you paid from your pocket. 30 years later, what is the amount that you make out of this? Any guesses? Give me a wild guess.
Approx 50 lakhs or something like that. Well, that's a lot of math to do. But I'm assuming 50 lakhs adjusted with...
So 1,000 rupees per month, 3,60,000. 1,000 rupees becomes 50 lakhs after 30 years.
Adjusted with the interest rates that you mentioned. I told you it's a lot of math to do for me.
So if you get a 50 lakhs, would you start investing 1,000 every month now?
Yes, I would. I mean, with the idea that okay, fine, there's a greater return in the future, I would be willing to save now and earlier as possible.
So congratulations. Yes. With 1,000 rupees that you invest every month over a period of 30 years, becomes actually 54 lakhs.
Okay. I was close. My estimates were close.
That's why I congratulated you. And you also said you have 1,000 rupees to set aside now, right?
Right. Yes.
Now imagine this, if you were to have this conversation 5 years hence from now.
Right.
Okay, so for whatever reasons we did not meet in 2025, we met in 2030.
Right.
And that time you realized that I could set aside 1,000 rupees. Right? So now you have only 25 years to invest. Right?
Right.
When you had 30 years, if you start today, you delayed it for whatever reasons, you did not know about it, etc. And you started 5 years later from now. Now you have only 25 years. Now the same 1,000 rupees, you're investing at the same rate of return, which is approximately assuming 14%.
Okay.
Now you're investing for 25 years. So you invested how much? You invested only 3 lakhs, not 3,60,000.
Right. Right.
Now most certainly you're not going to get the same output. It's not going to be 54 lakhs.
Yes.
How much do you think? We could invest 60,000 rupees lesser. So how much will that amount reduce to now?
I like how you're making me do the math, but up to an approximately 40 lakhs or so?
So you'll be surprised to know
Or lesser than that?
the amount reduces to about 24 lakhs.
Oh.
So I'll repeat this for you. If you were to invest 1,000 rupees every month for 30 years and it grows at 14%, the end corpus that you have in your hand is approximately 54 lakhs.
Right.
You delay this by 5 years. with just 5 years, so you invested 60,000 rupees lesser, right? The end corpus becomes about 24 lakhs. It becomes less than half.
That's concerning.
Now put yourself into this example and say that you are young. If you were to start today, vis-a-vis a person who is 5 years hence from now and not started, you clearly have an advantage of more than doubling the money that person will make. So that's why I emphasize it. I'm so happy that at this juncture, I mean, you're talking about this topic. I mean, during our college times, I don't think we were intelligent enough or aware enough to even talk about this. So you guys have a great advantage to your side. So out of your pocket money, if you will set aside 1,000 rupees from today, you have no clue what wonders it will do to you, for you in the future. And then when you get into the workforce, when you start making serious money for yourself, right? That time again, if you set aside 10 to 20% of whatever you're getting in hand, this habit will continue forever, and the kind of corpus you will create after 20, 30 years will be enough to take care of your retirement.
That sounds great.
And the same thing, if you start 10, 20 years down the line, imagine the kind of money that you have to invest out of your monthly income.
Right. Much more.
Now coming to LA fire, coming to the geopolitical tensions.
Yes.
Okay? So the world is always going to be uncertain. It's going to be volatile. If there was certainty, then there is no opportunity to make any money. Right? So somewhere you have to ignore these things that are going to happen. They're going to affect you, no doubt. But does it change the normal course of living? Does it change your money management habits? Does it change the fact that at one point in time you will retire? Does it change the fact that you will need money at retirement? So why get distracted from all that? I put this very clearly in our internal communication with our clients also. We work to generate income. Your income generates wealth. So don't lose focus on generating income. Put everything that you can to generate that income. Put that income to generate wealth, and do not interfere in the process. Let income generate wealth on its own. It will do that. Keep your focus only on generating more income by becoming more valuable to the organization you're working for, by becoming more knowledgeable, by increasing your skills, by owning better skills as you grow. So you'll possibly climb the corporate ladder faster. So just keep working on yourself and generating income. Put your income aside into wealth creating assets and let it go. Do not interfere in that process. People are doing the other way around. Every morning you find sitting in their office and they're looking at money control and all those things to track the markets, to BSE and AC. I mean, they're focusing on what money is doing for themselves rather than generating income for themselves. So I think keep your focus very clear. At all points in time, we have this conversation next year, we have this conversation 10 years down the line, there will be some geopolitical problems happening somewhere. There will be some economy which will be under stress, there will be some inflationary issues, there's some world leader being assassinated somewhere. All this is going to happen all the time. Learn to ignore the noise.
Well, this is certainly going to be the magic spell of the podcast, and I'm sure there'll be more that let the income generate wealth and don't interfere in the process, which is amazing. Which brings me to another question which surrounds economic uncertainty, which is AI. And I'm sure AI is a term and a part and parcel of our lives nowadays, as well as the emergence of big data and markets. So with both of them, say, working actively in the market today, or rather their presence, what do you think is the future of investments? With them being at the core focus today, how do they affect the market in the future, or what differences are they making today as compared to the time back then?
So I'll answer this in two parts. One being how does it affect people's careers?
Right.
Okay, and the other, the investment opportunities.
Absolutely.
Okay, so let's come to the career element first, because I think that's the major concern for the youngsters today, like AI taking over all the jobs, and will we ever be employable in that context?
Absolutely.
So look at a time when offices were run without computers. We've seen those times. I mean, not you, but we've actually seen those times when there were dot matrix computers and something of that kind. Anyways, the point is, when offices got automated and introduced computers, one computer could do the job of what 10 people were doing earlier. But what has happened? Have people really become unemployed because of computers per se? No. So AI is going to take up certain jobs. No doubt. It's going to take away certain jobs for no doubt on that part. But as an economy, when economy flourishes and new things come into picture, then job opportunities will be created.
Absolutely.
As I said, just make yourself worthy enough.
Right.
Somebody or the other is always looking for people who can be useful. Right? How you're going to be useful? We have people who studied engineering got into finance. We have people who got into finance, got into some other business altogether. Right? The point is that are you valuable enough to be hired? Are you valuable enough? Are you smart enough to be hired to do any job? Not necessarily all those people who've done chemical engineering are working in the chemical industry. It's just that that person is intelligent enough, is worthy enough, is hardworking enough, is committed and dedicated. Now the same intelligence can be used into something else. So just invest in yourself. Do justice to what studies you've been blessed with. I'm using those terms because 10 years, 20 years down the line, you'll believe what I'm saying today. It's difficult to understand as of today. So become worthy enough. Become employable to that extent that you can be useful to an organization. Then the organization will take care of you in some way or other. You'll find enough work to do. The other part in terms of investments. Okay, so yes, the AI is going to change a lot of things. I'll give an example. During my times, I mean, I'm saying this as if I'm very old, but yeah, during my times, when we went on holidays, we would have this Kodak reels. I don't know if you've even seen those, no?
Yes, probably.
Those cameras where we would put a reel inside and then we click pictures.
Right.
There were 36 photos that you could click, and you didn't have a preview that you could do today. Like you click a photo, you see what's happening.
Yeah.
So we clicked a photograph and we believed it was good. We came back from a holiday, we got it developed, and then we got the prints that we had seen. And that time, if you missed out on something, there's nothing you can do about it.
It's gone.
So Kodak was a world market leader in those films.
Yes.
Okay, it was a Fortune 500 company in that context. It was a world market leader in those roles. Then came Sony with a digital camera. Overnight, this company became bankrupt. Because nobody would buy those reels anymore. We could just click a photograph, see if you don't like it. If you like it, we keep it, otherwise just delete it. So there was a technical shift. Right? So Kodak went bankrupt overnight. So these things are going to happen in future as well. AI is going to possibly wipe out some industry completely altogether. Right? This is going to be the dynamic nature of economy that I said. You're always going to have something that is going to disrupt things. There are always going to be something that is going to be possibly threatening the existence of certain companies and industries altogether. Okay, so from an investment standpoint, I would need to have a basket of companies in different sectors. I would not only invest in IT, I would not only invest in pharma, I would not only invest in FMCG, I would not only invest in manufacturing, etc. I will have my investment in different categories so that if one goes through certain stress, I have another option. There are investment opportunities which give you geographical diversification as well. Like sitting in India right now, I can invest into companies which are listed in the US. I can invest into Google, I can invest into Facebook, I can invest into Nvidia, I can invest into all those companies sitting here in India. The Indian government permits me to do that officially, every year under the LRS, a liberalized remittance scheme. Right? So there's a lot of opportunities. You have to keep your eyes and ears open. You have to diversify. You have to have exposure into different. And if you can't do it yourself, then there are investment management firms and there are asset management companies, mutual funds as you call them. You can park your money with them. I said, let income generate wealth. You focus on generating income.
Yes, absolutely. Well said again. You have very smartly just touched upon topics, current scenarios, market volatility, AI, big data, and whatnot. And you provided fresh perspective, as I mentioned before as well, and I'm sure that the students, the audience looking at this podcast will definitely feel a lot more relieved when it comes to perceiving jobs, the labor market now. With that being said, we'd like to shift gears again into a different segment on understanding things from the perspective of a student, which is why we've gathered here today, the main crux of this podcast today. So I'd like to understand that, say 2010, the number of demat accounts in India were 16.8 million. And the same 2024 surged up to 175 million. I'd like to understand that is it financial literacy that plays the main role in a surge in, say, the number of investments or the number of demat accounts being built? Or what is that one factor that influences such a growth in the finance sector, especially the investments?
So, I would say this: the surge that you mentioned, it's more like the tail level of it, in the sense from the year 2000 when COVID hit people.
Right.
I mean, suddenly everybody's sitting at home doing nothing, and they found trading and stock market trading to be an easy way to keep themselves occupied with. But anyways, I mean, I wouldn't say that's the only reason. But yes, I mean, that was one of the reasons when people had a lot of time to think for themselves. There's actually the calls that we get on our shows as well, where people call in and say that I started trading during COVID, that's when I started, etc. So I would give it a lot of weightage to the fact that COVID was a time where people were sitting at home doing nothing, so they thought that trading into shares was an easy thing to do.
Yeah.
But yes, awareness has also gone up. Okay, the kind of work that SEBI is doing, kind of work RBI is doing, for example, our regulators, let me put it that way.
Right.
The regulators and the market infrastructure institutes like the BSE and SE, the work that these institutions are doing in terms of spreading financial awareness is tremendous. We talk about channels that you said, the business channels like CNBC, the Z, NDTVs, and all other channels. The kind of airspace that they give for this topic is largely responsible for the kind of awareness that has been created. How would you communicate to somebody sitting in the rural villages about the advantage of SIP unless a channel carries it all the way there?
Right.
So I think a lot of credit should be given to the media,
Absolutely.
the regulator, the market infrastructure institutions,
Right.
to create that safe environment, the regulatory environment and the digital platform, the Aadhaar based KYC that can be done now. I mean, you can sit at your home, sitting in the remote village, and you can possibly open a trading account sitting there, which otherwise would have entailed a physical exchange of documents, a point of presence, etc. I think that has, as an overall ecosystem, has helped. And the Jan Dhan, that account opening scheme that they had, where people across the country opened their bank accounts for the first time. So I think, this whole exercise of the government, regulator, the intermediaries, put together has enabled many people to come onto the platforms. So I think that has been good. And then combine it with the fact that last 4 years people have generated exceptional returns from stock market.
Absolutely.
Yeah, so that has been a motivation for people to continue. But they've made so much of money in the last 4 years that they want to continue investing even further. And I hope 2025 is going to be a little difficult year for investors, where they're not going to make as much money as they made in the last 4 years. I hope they are patient enough to understand this and matured enough to possibly understand that these are cycles and continue investing, so that they can have a better experience 4 years, 5 years down the road.
Absolutely. I mean, the only thing we need to live in life is hope, and I'm sure, we will be hoping for the investing to be good in this year as well. And again, you have touched upon these various sectors and all of that, and how you mentioned about different roles, different sectors, say the government, and different people playing a role in motivating financial literacy to the people who are investing today, and that's why we see a surge. Do you think that the emergence of, say, social media, and there are many channels, there are podcasts, there are social media channels that create content related to trading and investment tips and whatnot. Do you think that their presence as well as that of AI, has influenced positively the number of people who are in the...
So I understand what you're saying. Frankly, if you ask me, I think social media has done more harm than good.
Okay.
That's my personal view.
Okay.
The kind of wrong information that gets circulated it's not a joke, quite honestly.
Right.
I've met people at the ground level who are following XYZ influencers, etc. I think there's a lot of misinformation, around in the market, and it has done more bad than good.
Okay.
Obviously, there are good people. I wouldn't take that away for people who are doing genuinely good work. But the probability of finding that one or two good people is almost finding a pin in a haystack. That's what it said, right?
Yes.
I mean, the probability of getting that right is almost zero. Okay, and what happens in this bargain is, how much does it take to start a YouTube channel of your own? I mean, what does it take? It takes a camera and a Gmail account.
Yeah, not much. Yes.
Right.
Right.
I mean, I have heard some stuff which is, to be honest, disgusting. I mean, the kind of the content that goes on air and the kind of projections of being professionals and whatnot. I mean, I can't tolerate social media for 5 minutes now. I know for whatever reason my feeds are filled with all this. I know you have a choice to say not interested and still move on to something else.
Yes.
But I think there's so much of crap happening online. And you have to be very, very careful of whom you're listening to. What is the credibility of that person, not in terms of followers, because the only barometer of understanding who is a successful influencer is the number of followers. I don't know what kind of barometer is that. I mean, there has to be education, qualification, there has to be certification, there has to be recognition by the government or by the regulators.
Absolutely.
So I think, so honestly speaking, whom you get your information from defines what you're going to be. So you have so much of good content from regulators. Regulators are doing so much to disseminate information. You have BSc Training Institute. There's a Bombay Stock Exchange runs a training institute. Similarly, NSE has a training institute where they run courses related to market. Now, I wonder why would a person not join those courses run by the Bombay Stock Exchange, the National Stock Exchange. There is listing set up by SEBI, the National Institute of Securities Market. That's the organization that you should be going to, right? For information, for learnings. Not a random influencer on YouTube having X number of million of subscribers. So I think we just lost the track of whom to follow, what to follow. We are listening to whatever suits us, whatever hits our heart, and we are feeling that this guy speaks well, okay, fine, good for me. Okay, so somewhere you have to know that there are officially regulators and the institutions offering courses. Go to those courses. Study there. I mean, that's where the content is.
Absolutely.
Right? There are officially certified content. So I think, I'm actually very disappointed with what's happening online.
Yeah, all right. I absolutely value that perspective coming from you. Obviously, from years of experience, you know better, where to look at in terms of taking knowledge from the government or from the social media influencers. With that being said, since we're talking about the youth and the young generation now, India is at its highest youth population than ever, and inevitably the number of youth joining the labour market will be higher than ever. I wanted to understand what is that one opinion you will give to the youth who are just joining the labour market, or who have just joined the labour market. What is that one piece of advice you would give to them in terms of maintaining a good financial well-being?
So the first thing is never take anything for granted.
Okay.
There is no substitute for hard work.
Right.
And if I may take the liberty to say, this particular generation is not used to hard work. I mean, you can't survive 2 minutes without, not you particularly, sorry. It's a generation. But in 5 minutes you don't have internet, you see what happens to you.
Right.
So you not understood the hard work. I mean, you call for a cab on the phone. I mean, you don't know the pain that it takes to go to a cab and get refused or a rickshaw get refused. So anyways, the point is there is no substitute to hard work. Okay, that's just one formula that you have to remember. Success will not come easy. You may get lucky once. You may get lucky twice. That's it. Okay, so if you've done something which has resulted into some positive outcome, doesn't mean that's the norm.
Right.
Okay, be ready to embrace failures. Everything that you do is not going to be successful. Doesn't mean you stop trying.
Absolutely.
Okay, so it's not going to be an easy ride. I would say all of you coming to this college particularly should be very grateful to the Almighty. I'll tell you why. So if you have a fully functional and a body, which is you're not handicapped in any way, you have food, clothing, shelter to eat. Okay, you have 2 to 3 meals in a day and access to 2 to 3 meals in a day. you get to study in one of the best institutes in India. You are amongst 0.1% of children across the world, not India. You're 0.1% of children in the world. If you have all of these things, okay, you have nothing to complain. Unless you get, possibly disturbed with your friend having a bigger phone and a car, nobody can help you with that. Right? So we find stress in our lives. We find reasons to be unhappy. So every time that you feel that there is something that you're not getting from your parents or you wish you had, etc., look at people. When you just go back home, you will find people on the traffic signals, you find children coming to you. That child could be you, right? And what's the difference? I mean, that child was born there, you were born to another family. So just be grateful to what you have. Okay? That sense of gratefulness should reflect in your work. Coming back to what you said, that what is that one piece of advice? So one is be ready for failures. Okay, be prepared. It's going to happen. And I'm also telling you 9 out of 10 times that you try to do something, you will not be successful. Be ready for it. We just need that one possible motivational success that will bring you to the next level. So don't give up until you get there. And if you put in sincere effort, you will get it. There is no doubt on that. It will take time, but it will come. Okay? So be grateful for what you have. Put in everything. Trust me, you are 0.1% of the world population. If you have access to all the things that I enlisted. Right? So you have nothing to complain. So do not be under that pressure, that stress of not achieving something because God has already been kind to you. In fact, God has been partial to you when you got all these things. Work with a free mind. Be open to hard work. Be open to failures. And I'm sure you will make your way somewhere. It will come. It will come late, if at all. You believe that it's not happening immediately. Because we are running out of patience these days. Everything, the cab doesn't come in 5 minutes, we start getting disturbed. Right? Because everything is quick these days. So we don't know how much time it takes for things to. So it will turn around. Have patience, invest in yourself, your knowledge, make yourself valuable. You are going to be employable for sure. In some industry or the other, you'll make your way. But if you don't take things for granted to say that, look, I'm born with a silver spoon, I am going to get everything served to me on my table, it's not going to happen.
Absolutely. Well, I now understand why you are such a reputed speaker and your whatever advices and everything you give is so valuable because of the fact that you aren't only mentioning about and talking about financial advices or how to make it financially, how to navigate the way up there to become a billionaire and all of that. But you are also emphasizing on how we can as individuals be grateful for what we have, be patient with what we have, and still look at the bigger picture. With that being said, and unfortunately we come to the end of the podcast. So there's this last question that we'd like to hear about in terms of your opinions on that. So the last question is all about the highlight of investing and investments. With most speakers, we've heard that investing early is the mantra, the common mantra that we've come across. And you had mentioned about investing early as well. But how would you perceive investing early as it being too early for, say, an individual with no risk appetite and who doesn't really have a lot of money to invest in? How do you bring about a balance as a youngster, as someone who has to invest?
So, I put it like this. Today there are options to invest even with 100 rupees per month.
Right.
You don't have a choice to do that.
Right.
So at this juncture, what I encourage all of you to do is, whatever little amount you can invest. As I said, amount is not important.
Right.
What is important is getting that habit and the culture
Right.
of good money management.
Absolutely.
Okay, so when you start with that much amount, so there's again a very popular saying that if you can't run, you walk.
Absolutely.
If you can't walk, you crawl. Right? So start, keep going. Don't stop just because you feel that 100 rupees is not enough. What will 100 rupees become after 10 years? Nothing.
Right.
Just start. Okay, go with the flow. There's a lot of learning on the way. You mentioned about risk appetite. Okay, so there is where knowledge comes into picture. What you need to do is, we are not proficient in every field that we talk about, right? So You may not be proficient in the financial industry, the investment industry for that. Take help of a professional. Take guidance of that person to say that what is risk? You have to understand that. Like what is risk? We talk about risk, right? But what is risk? And how we can mitigate that risk?
Absolutely.
So when you start from your home to come to college, there are a lot of things that can happen on the way. Right? There is risk in everything. The moment you step out, in fact, when you're sitting in your house, there is risk even there.
Absolutely.
There are safety precautions that you take, right?
Right.
When you're driving, there is a possibility you will meet with an accident. Do you stop driving?
No.
You take precautions, right? You wear a seat belt, you follow the traffic lights, the rules of driving. That's what you do with investing. So if you have to achieve something, so for a long term, if I may just use this example to make you understand what I'm saying. So we are in Mumbai right now. If we were to take the Mumbai-Pune expressway and go to Pune, okay? What choice of vehicles would you have? How would you travel there?
Absolutely, a car or
A car, right?
a bus.
Is it safer on a cycle than a car? Is cycle a safer? No, not for Mumbai-Pune, but is cycle otherwise a safer mode of travel?
Absolutely not.
Right?
Not sure.
You've taken the car and you've gone to Pune.
Right.
Now, if you say that car goes at 120 speed, the official speed limit being 100, the tires have a risk of bursting,
Right.
all those kind of things. Okay, you're not going to walk up to Pune
Definitely.
just to be secure. You follow the rules, right? Similarly, if you were to go down and go to the next lane, which mode of transport will you take?
Walk.
You'll walk it.
Yes.
You will not take a car for that.
Absolutely. Yes.
Similarly, if you have to invest for 20 to 30 years, are you going to walk or are you going to take a car?
Got
This is where the appropriate investment for the appropriate timeline is important.
it.
So if you're investing for long term, you would need to add equity to your portfolio. Right? Because otherwise you're not going to beat inflation. I said their cost of living goes up. If cost of living goes up by 7%, and if your investments grow by 5 or 6%, are you making money? You're not. So you need to take that risk.
Absolutely.
Right?
Right.
So you have to understand what is risk. Risk is, what is risk? When you do something which is not matching to your destination.
Right. Right.
You get what I'm saying?
Yes.
You're not going to take a cycle to Mumbai-Pune Express.
Absolutely.
You're going to go by car.
Right.
And you're not going to take a car to go to the next lane. You possibly take a cycle or walk it. So have the appropriate investment product for the appropriate journey. If it's long term, you have to take risk. There's no choice. Not taking risk is going to be the biggest risk. The money will not grow. Will not beat inflation.
Right.
So be mindful. I know it can be confusing. It's not easy, but at this age, if this is what we're talking, I don't think we even were talking about these things when we were in college. So I think you guys are already one step ahead.
Alright.
So congratulations to all of you
Thank you.
for the wonderful work that you're doing.
Thank you so much.
And even if you could take possibly of this conversation that we had, normally there are only one or two takeaways.
Right.
So what hits you, what appeals to you is what you have to possibly take back from here and try and implement it. If you implement it well, I'm sure you're going to do very well.
Well, the one thing that would stand out for me personally would be let the income generate wealth and don't interfere, and that's what I'm going to swear by. But for the audience, I'm sure you have spoken about a lot of insightful things concerning the finance world in general, and you've touched upon so many topics, and not just topics, you've also provided a sneak peek into the daily lives of people, the employment sector and everything. You've literally touched upon everything. I doubt we have uncovered anything or something like that, because I'm sure we've covered each and every aspect of the topic. So thank you so much, sir, for sharing your experience, your valuable insights and your precious time with us. Thank you so much.
Thank you for having me, and I
Thanks.
thank all of you, and I really hope you find listening to this, and if there is some worthy and if there is even 1% impact that I have on anybody listening, I'll be very, very happy. Thank you for having me.
Thank you so much.